Hello Maverick traders, this is Imre and welcome to this class on identifying impulsive price action. So the last couple classes I've covered the general characteristics of the two phases of market behavior. Impulsive price action, which is when the market is trending, and then the corrective phase, which is when the market is consolidating, it's pulling back, it's essentially correcting a percentage of the prior trending movement. Now, it's important for me to explain where these terms originate from, and they originally come from a framework for market analysis called Elliott Wave theory, otherwise known as the wave principle. The wave principle is the foundation for my personal trading plan, and it's the filter through which I make almost every single trading decision. So it's important for me to go over this with you guys so you can understand how I look at a market, which in turn keeps me on the right side of the trend far more often than not as a trend trader. So whether you want to build a trading plan using the wave principle as a foundation like I do, or if you want to use it as a supporting tool, either path is completely okay. What I love personally about the wave principle is that it is rule-based, it's mechanical, it's objective, and it is data-driven. All right, I think those are essential elements to incorporate into a rock-solid trading plan. So let's get right into it. Here is an idealized line diagram of a complete Elliott wave cycle. It's governed by 5 waves. Once 5 waves are complete, we will see a setback, a larger correction that's going to then follow. So here we have 1, 2, 3, 4, and 5. If you can count to 5, you can master the wave principle. It's, I'm say that tongue-in-cheek, it's not quite that simple, but that is really the basics of it. You only really have to be able to count to 5. So there are 3 rules which govern the formation of these impulsive waves. So let's get to rule number 1. So rule number 1, is that wave 2 cannot retrace more than 100% of wave 1. So here we have a large wave 1, and then we have a erroneous labeling of a second wave. The reason this can't be a second wave is because it's retraced more than 100% of wave 1. So that is one cardinal rule, the first cardinal rule of wave formation. The second cardinal rule is that wave 3 cannot be the shortest wave. In fact, wave 3 is often the longest wave, the most extended wave. So if you're ever labeling a price chart and wave 3 is the shortest wave, then you've made a mistake somewhere in your labeling. Now wave 3 can be shorter than wave 1, but if wave 3 is shorter than wave 1, then wave 5 must be shorter than wave 3. So no matter how you slice it, wave 3 cannot be the shortest wave. And then the final and third rule is that wave 4 cannot end within the price territory of wave 1. So you can see here, this is an erroneous labeling of this fourth wave because wave 4 has ended within the price territory of wave 1, violating the rule. So there are other guidelines, which we'll be discussing in a future class, that will help you ensure that your labels are in the right spot. But these are the 3 cardinal rules. If you start off looking at a price chart by keeping these 3 rules in mind, then you will keep yourself on the right side of the trend. Okay, so we're now going to take a look at some examples of good Elliott wave labeling, good impulse wave identification, and then a couple price charts where there are mistakes. So here we have a good impulsive wave that's been labeled correctly, right? Waves 1, 2, 3, 4, and 5. Doesn't matter what the price chart is, guys, okay? So in this case, it's on the US government bonds 10-year yield 2-hour price chart, but it could be on Bitcoin, it could be on the dollar, it could be on the Aussie dollar. It doesn't matter. The rules for wave formation are universal, regardless of the market that we're actually trying to forecast. So here, let's see if the 3 rules have been followed. Does wave 2 retrace more than 100% of wave 1? No, it does not. Is wave 3 the shortest wave? It very clearly is not. And then finally, does wave 4 end within the price territory of wave 1 all the way down here? And no, it does not. So we can count a 5-wave movement, which tells us that the larger trend is up and that this setback should ultimately prove corrective. All right, which means that we're going to see new highs in this market. Okay, this next price chart here is in the Swiss franc Japanese yen. Okay, so here we have a 5-wave advance. And again, we're respecting all 3 rules. Wave 2 does not retrace more than 100% of wave 1. Wave 3 is obviously not the shortest wave. It's much longer than wave 1. And wave 4 does not end within the price territory of wave 1. So again, we have a complete Elliott wave cycle. And then here's another example, this time in Bitcoin. Here we have wave 3 is clearly not the shortest wave. Wave 2 does not retrace more than 100% of wave 1. And wave 4, although it comes fairly close, does not end within the price territory of wave 1. So all 3 rules are followed. Now, I'm showing this Bitcoin example for a very specific reason. Although you can't see it on this slide, Bitcoin does indeed go on to make new lows. So this illustrates a very important point about the market, which is that the market is fractal. So obviously there are changes and reversals in trend. So this 5-wave impulsive advance to the current all-time highs in Bitcoin capped a larger degree 5-wave advance that originated right from the very beginning, from Bitcoin's inception. So we have multiple degrees of trend all completing at once. So again, this concept, which we're going to explore in more detail later on, so don't get hung up on this, but the concept is that the market is a fractal entity, which means we're going to see these waves unfold in very similar formation, in very similar shapes, and adhering to very similar guidelines and ratios across all time frames. So although we've gone on to finish 5 waves up here, that's simply 5 waves of a larger multi-year 5-wave structure. Now here we're going to get into 2 examples where the rules have been broken and we don't have legitimate impulsive wave labels. So here the mistake with this count is that wave 2 has retraced more than 100% of wave 1. We can see that it's poked a little bit beneath wave 1. That is not good. It immediately means we have to disqualify this as an impulsive count. All right, we have to think of a different way of labeling this chart. But the other rules have been followed. So if we assume that wave 2 ended, let's say it ended around $400 here in Bitcoin Cash, well, wave 3 clearly is not the shortest wave, and wave 4 does not end within the price territory of wave 1. But it's not good enough to have 2 rules out of 3. You need all 3 rules to be followed in order to have a valid impulsive count. So that's the mistake that we see here, is that wave 2 retraces more than 100% of wave 1. All right, so going on to the next mistake, the rule that's not being followed correctly here. So if you aren't sure what it is, take a couple moments, pause the video if you have to, and then think hard about the rules, which one's not being followed. All right, welcome back. So the rule that's not being followed here is that wave 4 ends within the price territory of wave 1. So wave 2 does not retrace more than 100% of wave 1. That's okay. But wave 3 here, wave 3 is not the shortest wave, so that's okay. That rule is being followed as well. But wave 4 ends within the price territory of wave 1. So it ends below 104.01 here, or 02 if I were to round that up in the Euro Swiss franc currency pair. So we've traded into the price territory of wave 1 and wave 4 has ended there. So that's again not good, disqualifies this labeling as being a legitimate impulse wave. Okay, so we've covered some good ways of labeling impulse waves, right? The right things to do. And we've just gone over some of the mistakes, the wrong way of labeling a price chart. So again, if you, as homework, want to send me some practice charts that you've labeled and saying, hey, am I identifying impulsive price action correctly or not? That would be a fantastic start. I'm more than happy to take a look at your homework assignment and let you know whether I see what you're seeing, if we're on the same page or not, or if there are some adjustments you have to make. So I hope you enjoyed this video. I hope it was helpful, and I hope I'm giving you something that's actionable that you can start practicing and implementing right away. So thanks everyone. Take care. See you in my next class next week.